Yeah, I can see the screen.
Okay, this was the question, I think. Let me open the question also.
Yeah, this is.
Yes, now you can see the question.
Yeah, I can see it.
Yes. So this is the question with the opening balance, and then there are some transaction. So I we have already covered the transaction part, means how it will be written in journal entry and how it will be transferred to ledger. But we have discussed this in the previous class about opening balance. I think you have not solved any question related to this.
Yeah, I didn't solve any question related to the opening
Okay.
balance.
So whenever there is any opening balance given in the question, you can pass journal entry for opening balance because uh, there are some items on the debit side, there are some items on the credit side. Both sides should be equal. So in this question, I have written this. Just yes, this entry is related to opening balance, cash in hand 300, cash at bank 7,000, then Jahir 800 on the debit, stock 4,000, Sharma 1,500. So all these balance that is given here, we have written it as the opening entries. Okay, this is how the opening entries are passed because there are so many balance. So on the debit side, there will be many accounts. The credit side also, there will be many accounts. So all these accounts will be treated as opening balance. And how it will be written? If you remember the like modern approach. So assets, liabilities, capital, income, and expenses. There are five types of accounts. So you can
Yeah,
easily categorize these and you can write the balance where it is increasing, like cash account. It is asset, bank account, asset, Jahir, stock, Sharma, all these are assets account. So
yeah.
all
So the
these
increase will
items
be
will
debit.
increase on the debit side. Yes.
Yeah.
So opening balance also written on the same side, debit side. In the same manner, Rahul, Govind, capital, and bills payable, these are liabilities for the business, liabilities and capital. So these will be written as credit balance. So that's how we have written. Rahul, buy balance BD 900. Buy balance BD 900. Then there is Sharma, 1,500 debit. This is 1,500 debit, Sharma. Then Govind, credit 2000. You can see the journal entry of Govind 2000 on the credit. So all these items are written here, okay, as per the
Okay.
balance that where it will go. I have also like calculated the total of this account and calculated the balance. So April 1st balance PD 9,700, 9,700, and the balance one. Then cash account, there will be many entries after the balance because you can see cash to capital purchase to, actually this is some other question. I'm not talking about this. This is other question. So balance, you know how to write here now.
Yeah, I know how to write it.
I'm solving one portion or one ledger, that is cash account, because uh, most of the balances are related to cash. So cash in hand 300 I have written here. April 1 to
Yeah.
balance BD 300. Then about goods from Govind, there is no cash transaction here. Sold goods to Sharma, no cash transaction. Sold goods paid. Yes, this is the first cash transaction, April 15. Paid Govind by check on account. So we are paying by check 1,500. So if it is a payment, then it should go in bank account. So on 15th, April 15th, it will be Govin 1500. Sorry, by Govin 1500. Then after that, received from Sharma a check of 2000 allowed him discount. So to Sharma, we have received a check, so the money will be deposited in bank. So 2000. Then there is sold goods to Sharma, paid rent by check 200, again by rent 200. Then sold goods to Jahir, paid salary in cash. Now salary is in cash, so it will go in cash account. Transaction is an April 30th by salary. 300. Now, balance of cash was only 300, and we have paid a salary in cash 300. All amount paid or receipt is mainly through check. So all the entries are in bank account. So cash book balance, you can see on the both side, it is the same amount. The total will be same. So there will be no balance, account will be closed. Now we will come to the bank account. Here it is on the debit side, it is 9,000. And on the credit side, it is 1,700, 1,700. So 9,000 minus 1,700, it will be by balance CD 7,300. And this will be written here to balance BD 7,300. This is May 1st. This is April 30th. Or April 20, April 18. So this is how we have to write the transaction and the opening balance in the ledger account. Is this clear to you?
Yeah, it's clear.
Okay. So should we start a new topic now, or you want to solve a question
No, let's
related
start a
to
new
opening
topic.
balance?
Mm, let's start a new topic now. Like, you know,
Okay. So which topic you want to start now? Because we have completed journal, ledger. Any other topic you have in mind? Tell me.
just 1 second. I'm just looking through the book.
Actually, there is a concept of subsidiary book, subdivision of journal.
Subdivision of journal. What is that? I never heard of this.
Subsidiary book. It is also called the name. Let me tell you just one.
Okay.
It is a special purpose book. Do you know?
No, I never heard of this.
Okay, so in school, which topic you have covered after journal and ledger?
In school, I've only covered the ledger. Aside from that, I didn't cover anything else. Like,
Okay. Okay, so
because I had exams.
subsidiary book is part of journal entry actually. That's why it is called subdivision of journal. Okay, and some part of it will look like a ledger, some part of it will look like a journal, and there is some difference also. Okay, so
Yeah.
that is called subsidiary group. First of all, why we need to divide journal into different parts? Because there is total 6 books we have to discuss in this chapter. One is cash book, one is purchase book, then purchase return, then sales book, and after that, sales return book. These are total 5, and there is one more, which is called proper journal. Okay, so these are the 6 books which we have to study in this chapter. Now, the first of all, the first thing is why journal is divided into 6 different categories. Do you have any idea?
Uh,
No.
no, not really. Why is it divided?
Okay. The same reason why we prepare a ledger, but it is little bit different. That's why. So why journal is divided? Because when we prepare journal entry, okay, let's say that after journal we have solved the ledger, then trial balance, then financial statement. So these are the 4 steps: journal, ledger, trial balance, and financial statement. So at any point, if we find a error or any problem with the accounts, then we have to find that where it exists and we have to correct it. So mainly if the error is in journal entry, let's say there is some error in journal entry, we have tried to find out the error and we find out that it is in the journal. Now if you have to find this error again, the same problem will happen, that we have to go through all the entries to check the error, to find it and correct it. Yes.
Yes.
Okay. Now, if the error is in like ledger, then it is very easy to find, because you will easily know that the error is related with which account, and you will directly go to that account and see the entries in that account. So it is easy to find. Yes.
Yeah, it is.
In trial
So that's
balance
why we
also.
categorize it so it's easier.
Yes, so that's why we are categorizing the journal into 6 categories, 6 different parts. That is called subdivision of journal. And if now, let's say the transaction, the error is related to any purchase, then we'll go to purchase book. If it is related to sales, then we'll go to sales book. If it is related to cash, then we'll go to cash book. And if it is not related to any of these, then we will go to proper journal. Okay.
Okay.
So there is a little bit difference from the ledger one. Now just understand that it is very important, this part, because in ledger, if you remember, then a journal entry has 2 aspects, like if it is purchase account debit to cash account.
Yeah, is.
So for any transaction, the journal entry is 1, yes, but the ledger entry is 2. It will go in purchase account, it will go
And
in
we went
cash
to
account.
cash account. Yeah.
So for every entry, there is two entry in ledger, and there is only one entry in journal. So this one entry concept of journal will be applicable to subdivision also, in subsidiary book also. Means we don't have to write any one transaction at two places. What we don't have to do?
We don't write the transaction in two places, basically. Is it?
Yes. So it means if you have written one transaction at one place, then it will not be entered in any other book. So that is why it is related to journal. It is called subdivision of journal. So like purchase account debit to cash account, I have written here. So it will go to purchase and cash account, but in this subsidiary book, it will go to cash book only, not purchase book. Okay, it will go to cash book, and for this purpose we have created a rule that in purchase book only credit purchase will be recorded, in sales book only credit sales will be recorded, so that if there is any cash sale or cash purchase, it will go to cash. Understood?
Yeah.
So all the credit purchase will go to purchase book, all the credit sales will go to sales book. Any credit sales return will go to sales return book, any credit purchase return will go to purchase return book, and any transaction that cannot go to any of these categories, like in cash book, purchase book, sales book, purchase return, sales return, then it will go to proper journal. Okay.
Okay, I understand. Yeah, okay, I understand what you mean by that. But like, what is the main difference between this this cash book and ledger then? Like, if you're categorizing the different entries, like you said, like under this cash book, we have different books, right? And we categorize the entries on the basis of that. Isn't ledger basically the same thing? Like,
Yes, that's what I'm saying. That you'll see that there are some similarity between ledger and subsidiary book. You'll see the similarity between journal and subsidiary book. So it is like a middleman between journal and ledger. There are some similarities. Difference is what I just told you, that in ledger every entry is will be written at two places. Yes,
yes, it is written at two places. Like,
but in subsidiary book it will be written at only one place.
can you give me an example of that, like, so I can understand
Yes,
it?
purchase account debit to cash. That's what I just said.
Okay,
Purchase
so
account debit to cash. So it will go to purchase account and cash account in ledger. Yes,
yes.
but this transaction will be recorded only in cash book, not in purchase book, because this is a cash transaction.
Okay, so we do it on the, what is that? On the debit basis. Like,
No, no, no. On not on the debit basis. It is like a rule of journal entry that every transaction have only one entry. Yes.
yes.
So that's the rule applicable in subdivision also,
Okay, okay,
that every transaction have only one entry. So it will, if it will go in cash book, then it will not go in purchase book. Simple.
okay,
And
okay.
if it will go in purchase book, then it will not go in any
In
other
the
book.
cash. Yeah, yeah.
Now, let me show you what will go in proper journal. So if you purchase goods on credit basis, what you write? Purchase account debit to creditors account.
Yeah.
And if you purchase any assets on credit basis, what will be the journal entry?
Or we purchase any assets on the credit basis. So it will be
Assets account debit to
asset
creditors
account
account.
debited to the creditor's account.
So now this transaction will go in purchase book. because it is a credit purchase. Now, this transaction will go in proper journal. Why? Because it cannot go to any other book. Like it cannot go to cash book because it is not a cash transaction. It cannot go to purchase book because we are not purchasing goods. It cannot go to sales book because it is not sales return, not purchase return. So there is a separate book for these type of entries that is called proper journal.
Okay.
Is that clear?
Yeah, it's clear.
So
Yeah.
every transaction have only one entry. That is the main difference between ledger and subsidiary book. You have to remember this.
Okay.
Okay. Also, the format will be different. Actually, one format, cash book format is almost similar. But in purchase book, sales book, purchase return, sales return, proper journal, the format will be different. So that is the another difference.
Okay.
Okay. Now you can see the definition here. When transactions are not recorded in one book, that is journal, separate book is maintained for each type of transaction. It is called separate subsidiary book. Okay, so when actually this happens only in big organization because there are too many transactions. If they categorize the journal into different books, it will be very easy for them to maintain the books to find the problem. Yes.
Yes.
So that's why when transactions are not recorded in one book, that is journal, separate book is maintained for each type of transaction, and it is called subsidiary book. Features: it is a principal book. It is sorry, no, that is actually a mistake. It is, I think I have copied from somewhere. No, it is not the features. That's why. Okay. So please write the definition.
Okay. 1 second.
Subsidiary.
Yeah, I finished writing.
Okay. Now, for the feature part, actually not feature, first see the categories. Actually, we will discuss uh, these books and then write the features of every part. Okay, so types of subsidiary book. Actually, there is two books that I have added here extra: bills receivable book, bills payable book. Actually, in some state boards, these books are also given, but in CBSE, only six books we have to cover. So leave the 6 point and 7 point and write the remaining.
Okay. Yeah, I finished writing.
Okay. So the first thing is cash book. Okay. Now, do you know that cash is which account?
Cash. Cash will be it will be asset account. It's asset.
or real account?
Oh, yeah, or real account, yes. Asset or
Yes.
real account.
So cash is a real account, first of all. So cash book is maintained on the basis of these rules of real account. So rules of real account is debit what comes in, credit what goes out. So I'm talking here about cash. So if cash is coming into the business, it will be on the debit side. And if cash is going out from the business, it will be on the credit side. Now, so cash book will start with a opening balance and it will end with a closing balance, similar with the ledger. Okay, so the format is also same. If you see here, you can see the format, or it is small, the writings.
So, yeah, I can see.
Okay. So it is date, particular, invoice number, LF, amount, date, particular, invoice number, LF, amount. Can you tell me the difference between cash book and cash account?
Okay.
For that, you need to remember the ledger format also. No idea?
No, I'm trying to like find a difference. Like, what am I looking at? Uh, okay, so we have to find the difference between that cash account
Cash book.
and the cash book. Okay, so the cash account. Okay, so cash book is like where you record like all of the cash transactions, right? Or no, no
No, no.
cash.
I'm
No, no,
just
no.
asking you about the difference in format.
The difference in format.
Format you can see here.
Yeah, I can see it.
So do you remember the format of ledger?
Yes, I do remember the format of ledger. It's the same
So
format
tell
only.
me, it's the same format. There is no difference.
Okay, wait. There is some difference. Okay, that particular that that invitation number, INV number, that is the difference. Like,
Okay. So the difference in format is like invoice number and LF. That is the difference.
invoice number and LF.
Yes.
But LF was also in that ledger chapter, right? We just didn't write
No,
anything.
that is JF,
That's JF. Okay. Sorry.
journal
I
folio.
kept confusing them. I thought that what is that? That invitation number? No. What is
Invoice
that
number.
called? Invoice number. Sorry. Invoice number was the only
Yes.
difference. I didn't realize.
So date, particular, invoice number, ledger folio, amount.
Ledger folio amount, yeah.
But in ledger format, date, particular, journal folio, and amount.
Okay. Yeah. In the
Okay.
ledger, there's only journal
Yes.
folio.
So this is the definition of cash book. Uh, Cash book is a subsidiary book as well as a principal book. It is prepared to record all the credit transactions, sorry, all the cash transaction of business. So this is the definition of cash book. If we talk about features, then uh, let me show you. Actually, only cash and bank transaction will be recorded in cash book. Cash and bank transaction both. Okay, we will discuss this in the next part. But you have to remember that cash and bank transaction both will be recorded in cash book. It is a subsidiary book as well as a principal uh, account or principal book, you can say. Then cash receipts will be recorded on the debit side because debit what comes in, and cash payment will be recorded on the credit side. The fifth one, it starts and end with cash balance. So this is the features of cash book. First, write the definition and then these features. Then we'll discuss all these features.
Okay. I just have like a small minor question. What is the meaning of subsidiary? I know
Subsidiary
principal book is
means
like main book. What is subsidiary? It means like it's a side book or something. Like it's not as
do you want
important as the principal book.
Hindi meaning?
Huh?
Do you want Hindi meaning or the subsidiary book meaning like it is a helping book?
It's a helping book.
Sahayak Bahi. Yes, it is called Sahayak Bahi in Hindi, but in English, if we have to explain it, it will be a helping book, which will help like accountant to know the errors in journal more easily.
Okay, okay,
So that's why it is a helping book.
okay,
And like a special purpose book, you can see the second name of this subsidiary book is special purpose book. It is written here. So it is created with different purpose, obviously, like some error finding problems, or if they don't want to like make things complicated, so they will. So cash book is prepared to record cash transaction, purchase is recorded. So every account have a separate purpose. So that is why special purpose.
okay. Because I just wanted to know the meaning. I know principal book is like it's the main book. It's important, but like subsidiary is like the helping book.
So definition you have written
Yeah, the definition of it.
these features. Now your exams are over.
Yeah, my exams are over. Today was my last exam.
So now it will be like holidays.
I think so. According to my school calendar, after today, I'll have 2 weeks of school and then I'll have holidays. But I don't know.
Okay.
They don't always follow the calendar. They change it sometimes. So maybe I'll have exams from Sun. Maybe I'll have holidays from Sunday or no. I don't know. They didn't send anything, so I'll let you
But
know.
they will give you some holidays time. Yes,
Yeah, they do. They're giving 2 months holidays. Like
two
not
months.
exactly, just a little less than 2 months. 1 week is not there, but it's 2 months basically.
Okay. Actually, many class is canceling, I think, due to these holidays and exams. So I think students are busy in these things. Some students are traveling maybe or something else. So that's why.
Yeah. Okay, so I finished writing, but like in the features of cash book, is there any like specific reason why we're only recording the cash and bank transactions? Is it because they're on monetary terms or something? Like, like a
No,
direct money is
only
being
cash and
involved?
bank transaction will be recorded because the name is cash book. Okay. So if there is any credit transaction, it means there is no cash involved in those transactions. That's why we will not record it in cash book.
Okay,
If I'm saying purchase book, it means purchase of goods will be recorded there only. Purchase of goods, which is on credit basis, because cash basis transaction will be recorded in this book. So it will not go to purchase book. But if any credit purchase we are doing for goods, then it will be recorded in purchase book. And if we are purchasing on credit any assets, then it will go in different
just
account like proper journal. Yes.
yeah.
So there are different purpose of every category here. So that's why it is also called special purpose book. So cash and this cash book is created with a purpose to record only cash and bank transaction. That's why only these transactions will be recorded.
Okay, okay. Yeah, okay, I finished writing.
Okay, this I will go one by one every feature. So only cash and bank transaction will be recorded. Along with cash and bank, there may be some discount. So it will be recorded also along with cash and bank. But mainly we have to focus on cash transaction because in any transaction, if there is no cash involved, then it will not be recorded in cash or cash book. Okay.
Okay,
Second is it is a subsidiary book as well as a principal book. Subsidiary book means it is part of ledger, sorry, journal. So that's why it is a subsidiary book because it is helping the accountant in different purposes. So it is a subsidiary book. And also it is a principal book because if you see the format, it is almost same as cash account. Okay, so every transaction which will go in cash account will come here in cash book also. So that's why it is also a principal book because when we are maintaining cash book, then we don't have to prepare cash account because it is same.
okay.
Okay, so the third is cash receipt will be recorded on the debit side. Cash receipt will be recorded on the debit side. So as per the rules of a real account, if you see the rules, it
Yeah,
is
when the
debit
cash
what
is
comes
coming
in.
in, it's debited. When it goes out, it's credit. That's basically the rule of
Yes.
that.
So cash receipt will be recorded on the debit side, debit what comes in. And cash payment will be recorded on the credit side because credit what goes out.
Yeah.
Now, the next is it starts and end with cash balance. Okay, so in every year, like in the beginning of the year or at the end of the year, there will be some cash balance. It is nearly impossible that in every year your cash balance is nil. Like at the end of the year, you spend all the money you have. This is not possible. Yes.
Yeah, it's not possible to spend all your money.
Yes.
Like,
Uh, so generally, if we receive money from our parent also, and let's say we have received some money for a certain month, let's say this June. Okay, so we have received money for June month, and we know that on the first date of July we will receive money again. Yes, for July. So at
yes.
the end of June, whatever we have as balance, will spend it or not?
Like whatever we have left, like,
Cash balance.
yeah, okay.
So we should spend it or not. Actually, the question is not should. We will spend it or not.
No, we don't spend it, right? Like not all of it because we
Yes,
can't we can't spend
because
all of it.
yes. So if we have saved some amount, then it will be better in the next month. If we need more money, then it can be utilized. But there will be uh, very less chance that it will be nil in the opening or closing. So that's
Okay.
why it starts and end with cash balance, whatever we are left with. Okay.
Okay.
So this is our features of cash. Tell me, is this clear?
Yeah, it's clear.
Okay. So write this format then, format of cash book. It is important.
Should I also add columns?
Columns.
The date, particular
The
invoice.
details, yes, details you should write.
Okay. Just give me a second. Okay, finished. Finished.
Okay. So date is the same thing. Transaction date we have to write here.
Yeah,
In
but
particular
transaction
column,
particulars
we,
amount. Only that I
yes,
left that invoice
invoice
number.
number. Invoice number is a new one. Invoice number means like if you are doing any transaction, you receive a bill or you give a bill. Yes.
Yeah.
So there will be some number, serial number written on that bill. That is called invoice number.
Okay.
Have you received any like purchase bill from any shop?
Yeah, of course. Every shop we give bill, right? Like,
Yes. So if you receive a bill, if you see the bill properly, actually we never see the bill like in detail. We just see the amount and the product detail. Yes.
yeah, we just see the products, like what to make sure we actually purchased everything, that everything is there. Because sometimes,
Yes.
they bill the same thing twice, so they don't bill it. So we have to check.
Yes. But we never see the invoice number here. We never see the like any tax related detail of the company, that they are registered or not, and then the address of the company. There are actually many details of about company and about the person who is purchasing in the bill. So if you see the bill from start to the end, then you'll get to know about many things. So this is the one written as a serial number on any bill. Okay. So that is our invoice
Okay.
number. Okay. Actually, let me show you a bill if I have right now. You'll understand. I don't know that you will able to see this or not, but let me show this. Okay. Can you see the first thing is GST number,
Yeah,
then
GST.
invoice. Invoice.
Yeah.
Yes?
Yeah, I can say serial number of invoice nine to
Yes,
nine two.
that is the bill number, the invoice number.
Is bill number like counting the number of bills? Like
Yes,
it
obviously
counts the
they
number of bills.
issue the bill in serial wise.
Okay. And then they have that number like digitally recorded, right? So,
Yes,
okay.
because let's say if they the tax department, if they issue a notice, if they like rate the company that they are hiding something, then they will see this and check that they are not generating invoice with random number. No, you have to generate invoice with serial number, because if any one is missing, then they will ask you about that bill, that where this invoice number is.
Okay.
So that is how it works. So invoice number is generated by the company which is selling. Okay. Then
Okay.
LF means like ledger page number, as we have written in journal. Uh, so ledger folio. Actually, this is mainly blank. So LF,
Because we're doing it
then
digital now. We don't do it on
yes,
paper anymore. That's what.
we don't have any page number, so that's why LF is blank.
Yeah. Then why do we
Amount
still write
and
LF regardless of it? Shouldn't we like remove it from the format if we're not gonna use
yes,
it
we
anymore?
should remove it, but I don't know why they are not removing it. Actually, they are not updating it. It is just like, yes, it is going on, so uh, it doesn't affect our like accounting or anything. So that's why we are not changing it. But
It
it
doesn't
should
really
be
matter
removed.
honestly. So it whether it's there or not, it doesn't matter anyways. So like
Yes, yes. Actually, if actually we are studying in the CBSE and like state boards, this LF is there, but in many boards like international board or IGCSE, uh, I, they have removed it. There are no LF in their books.
oh they have like because in my textbook it's very much there. Like
Yes, CBSE.
oh, it's fine. Like it doesn't make much of a difference anyways, so it's fine.
Okay. So this is our cash book. Now, there are three types of cash book. There are
There are
three
sub cash books also. Like
types of cash book. One is called single column cash book. The second is double column cash book. The third is triple column cash book. And after this, there is one cash book which is called petty cash.
A petty
So we
cash
will
book. It's for petty expenses, right? Like, for petty,
yes,
yeah, like small
yes.
expenses and stuff. Like,
So in
that's the
single
only one
column
I
cash book, yes. How do you know this?
know. Because my teacher, she told me what petty, means. That's the only one I know. I don't know the rest of them. So, like, explain.
Okay. So single column cash book means like there will be one column for amount, only one column. In double column cash book, there will be two column on the both side for amount. Like if you are seeing this, there is one column for amount on the debit side or one column of amount on the credit side. Okay. So this is single column cash book. If there is two amount column on the debit side and two amount column on the credit side, then it is double column cash book. In the same manner, if amount column is 3 on the both side, then it is triple column cash book. Is that clear?
Yeah, it's clear.
Yes. So basically, in a single column cash book, we record only cash transaction. In double column cash book, we record cash and bank transaction, means cash transaction will be recorded in one column, bank related transaction will be recorded in second column. And in triple column cash book, cash, bank, and discount, all of them are written. So these are triple column cash book. After that, there is a petty cash book, means for every month, there are many small expenses which cannot be met successfully by the main accountant. That's why main accountant give some amount to assistant, you can say PT cashier, so that they can meet the small expenses and give him the monthly like calculation of these small expenses and the balance amount. So after that, the main accountant will record this monthly expenses in a single transaction, in a single journal entry. That's why it is called petty cash book. Tell me, is this clear to you? Because we will discuss these things in detail in the next class, because we have to solve practical questions. So one by one, we will go in detail. I will explain everything, then solve a question, then I will give you a homework.
Okay.
But now you have to remember that your examinations are over. So please try to practice some portion and upload it, because after that you have uploaded it, then only I can check that you have done the portion correct
Yeah.
or not.
Yeah, I'll do all of the remaining homework I missed over the exams. I'll do it. I'll try to give it to you by tomorrow. Like,
Okay. So